BIS is not only the biggest bank in the world, they're the most powerful. They make the rules, they know the decisions. Why would they reclassify gold tier 1? Why would the central banks be purchasing it at a level the world has never seen? And it's not stopping. October and November 2024, I haven't seen the December numbers yet, their purchases were double the 12-month moving average. What they're all saying is, let's put gold at a much higher level and write it off against all of our liability.
Could gold skyrocket to $142,000 an ounce? And could that be the key to solving the global debt crisis? In this must-watch interview, Andy Schectman, president of Miles Franklin, unveils why central banks are hoarding gold like never before, the shocking mechanics behind a potential revaluation, and the massive implications for your wealth and the global economy. Plus, discover the hidden power of silver, the looming threat of hyperinflation, and why these changes could redefine the future of money itself. Don't miss this chance to understand what's coming before it's too late.
So, gold is held in every central bank balance sheet, ironically enough, in an account called the gold revaluation account. You have the head of the Dutch National Bank who's been advocating for revaluing the price of gold for a very long time. This isn't a new topic, by the way. I mean, Roosevelt confiscated gold in April of 1933, paid everyone $20.56 for their $20 gold piece. That 56 cents 100 plus years ago had significant purchasing power back then when a loaf of bread was a nickel, and you're getting an extra 56 cents for every $20 coin that you turn in. It had significance. People were happy, and then immediately he devalued the dollar by 40%, making gold $35 an ounce. And so it was revalued in essence. And we saw the same thing in 1971 when Nixon closed the gold window, only it was revalued by the market, not by a central authority. The window was closed at $35 an ounce, and here it is today at over $2,700 an ounce. It was revalued. To bring it closer to home, Senator Loomis from Wyoming, Cynthia Loomis, at the Bitcoin conference in Tennessee, speaking right after Trump, gets up on stage and says, President Trump is advocating for the Bitcoin Reserve. I am going to float a bill that requests the gold being held by the Federal Reserve on behalf of the Treasury is revalued, with the proceeds being used to buy the Bitcoin. And so the point of it is that it is an option where all of the central banks have been accumulating gold for the past several years. And before that, the most powerful bank in the world reclassified it the only other tier 1 reserve asset in the world. And if you take a look at the progression, the BIS is not only the biggest bank in the world, they're the most powerful. They make the rules, they know the decisions. Why would they reclassify gold tier 1? Why would the central banks be purchasing it at a level the world has never seen? And it's not stopping. October and November 2024, I haven't seen the December numbers yet, their purchases were double the 12-month moving average. And then equally as startling to me and telling is the repatriation. Over 40 countries have brought their gold back from the New York Fed and the Bank of England. India, as an example, bought more gold in the first few months of 2024 than they did all of 2023, and they brought all of that home along with 100 metric tons they've held at the Bank of England for a very long time. There is a drive to repatriate the price of gold. There is a drive, or repatriate gold in terms of possession, and there is a drive to revalue the price of gold to reflect a balance sheet across the globe that are filled with liabilities. And as it is right now, gold is not allowed to offset those liabilities on the balance sheet and is valued across the globe at $35 an ounce on those balance sheets. It's no wonder the head of the Dutch National Bank or one of the main representatives at the Bundesbank say, yes, we have all this gold in the revaluation account. We should do something with it. So yeah, I think it is an option. It's a lot easier than inflating outright or defaulting outright. Put the gold, and as crazy as it sounds, Kai, you put it at $142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. And when I saw it come closer to home with Senator Loomis actually bring it up, I started to think, well, this is something that's on the table. They certainly notice it. It would create hyperinflation. It would eradicate debt across the whole spectrum. and then would hopefully allow a new system to rise from it. What we're talking about is a reset. It's a reset, and it's a way to, I think, reliquify all of the central banks and start on a foundation of solid money. The central banks are the ones that would benefit more than any. You talk about the people who will even own an ounce of gold, it's the pimple on the elephant's rear end. Because as Rick Rule will say, if you ask him, he's here, he'll say 1/2% of the American public owns any gold whatsoever. You're talking a minuscule amount. So the big amount of gold is held by the central banks. It would benefit all of the central banks. The United States is 42.22. Okay. And I'm not exactly sure when they valued it and officially made it at 42.22, but all of the European countries, the Bundesbank included, is $35 an ounce on their balance sheet. And they call it the revaluation account. So in essence, if you think of a balance sheet, everything's balanced. They have their gold in their asset category, and they have the exact same amount in the revaluation account on the liability side. So they offset, because the way the rules are right now, you cannot offset a liability with your gold. What they're all saying is, let's put gold at a much higher level and write it off against all of our liabilities. And in essence, just like that, your balance sheet. Now, people will say, well, does that mean they have to sell the gold? No. It just means that their liabilities and their assets have balanced out, which would give them the ability to do other things that they otherwise couldn't do. To me, it's if you take a step back again and realize, why did the BIS reclassify it Tier 1? Why are the central banks buying it off the charts? And why are they repatriating? And I'm not saying it's going to happen, but I'm saying it's something they notice. It's one of these deals that it might just be too hard to pass up in terms of the benefits outweighing the drawbacks. And I do. In the United States, it's not as big of a difference as you would think, because the majority of all of the debt is owed to the American people. Medicare, Medicaid, Social Security, and government military pensions are $175 trillion unfunded, all owed to the American people. And over the last several years, as the Americans have been chasing yield, leaving the banks, going to money markets, record $7.5 trillion in money markets. That's all invested in treasuries. The insurance companies, the pension funds, they're all invested in treasuries. As we have been chasing yield, the American public has been buying the treasuries. At the same time, most of the world has been shedding and rolling off their treasuries and replacing it with commodities. We only owe $7 trillion to the rest of the world. If we were to Jasara, in essence, just forgive the debt, most of it would be on the American people. It would be a lot easier to start over and reset it that way. But I don't think that's something that they want to do. This would kind of be it would, in essence, kind of be the same thing to a degree. But it would be one that would, I think, not immediately put the United States in a position of loss of credibility completely and totally. No one's going to trust them again if they just outright default. No.
Oh, okay.
No, it's not.
Okay.
And that's the funny thing. That's just the almost $37 trillion. Based, if you take the debt and divide it by the number of ounces supposedly held at Fort Knox and the New York Fed. So no, it wouldn't. And that's the clever thing, the way that they do with the debt is that's off balance sheet. Most people never even think about it. But Medicare Part B is $99 trillion underfunded in and of itself. Part D, the prescription's $22 trillion. Social Security, $77 trillion. These are problems. Bad enough that we have an acknowledged debt of almost $37 trillion. It's in essence, it's increasing at the rate of about 100,000 per second. So as we have done this interview, we're already several $1 million deeper in the hole and growing. And so yeah, no, it doesn't. But it would certainly be an approach to begin our journey to reconciling our massive indebtedness.
If you found this video insightful, make sure to hit that like button and share it with others who need to hear this. Don't forget to subscribe to the channel and turn on the notification bell so you never miss critical updates like these. Stay informed, stay prepared, and we'll see you in the next video. ***.